The strong fourth quarter 2019 growth rate is the highest quarterly growth performance since the 2016 recession. Overall, this resulted in annual 2019 real growth rate of 2.27% compared to 1.91% in 2018. For this period, the oil sector contributed 7.32% to total real GDP, up from figures in the corresponding period of 2018, but down compared to the preceding quarter. Quarter on quarter, the oil sector recorded a growth rate of minus 20.87% in fourth quarter 2019. On an annual basis, oil recorded 4.59% growth in 2019, higher compared to 0.97% recorded in 2018. However, the oil sector's contribution to real GDP in 2019 was 8.78%.
Each time I talk about statistics coming from the NBS, yes, as much as we can rely on them, but I don't think they're as holistic as they should be, because the NBS, I do not, believe has that, capacity to be able to drill it down. Most of the statistics that they also generate are not generated from primary sources. That's also very important. And so when you are, doing a proper analysis on how this is impacting on the development of a country, I think it has to be a little bit more holistic. We need to be able to drive it down, to the subnational levels.
The non-oil sector, on the other hand, grew by 2.26% in real terms during the reference quarter, lower by minus 0.44 percentage points compared to the rate recorded in the same quarter of 2018. This sector was driven during the fourth quarter of 2019 mainly by information and communication, agriculture, financial and insurance services, as well as manufacturing.
The question for investors is what is the outlook of these sectors in 2020 and beyond? What is, the government trying to do to actually, support these sectors? Now, in the agri sector, we continue to see a bit of government support in that area. The CBN is giving, all kinds of interventions. Has created all sorts of intervention funds to drive credit into the agri sector and also to bolster performance.
As impressive as these latest figures may look, the challenge before the fiscal authorities is how to translate this growth into better standard of living for Nigerians. Chimeze Obi Wawu, Channels Television News.
Oh yeah, Mr. Bongo Adi joins us via Skype this morning to just talk a bit about some of this economics, the figures and what it means to people. Good morning and thank you for joining us today. Well, yes, we've seen that, and, well, it's good to always grow ever since that recession. But in context of what this means to the economy, this particular forecast by the NBS against that of the IMF, what do you think?
Well, I think we have every reason to trust the data by the Nigerian Bureau of Statistics, contrary to what the earlier speaker said, that we can't trust the data generating process. Well, we're not here to interrogate the data generating process, but if MBS can't get the right data, I don't think IMF would also be in position to give us the right data on the economy. But anyway, we are all sanguine. We're all happy that the economy has shown signs of life after a very long drag, but yet not the level where we want it to be, but at least it's something to give us confidence that we're in the right track. Now, a lot of people have projected some kind of doomsday scenario for the economy, but that doesn't seem to be acting out now. And I'm happy that I'm not part of that school of thought, because I look at some indicators that seem to be pointing upwards, which is especially the PMI, the Purchasing Managers Index, which has been upbeat for about 2 years now. So a lot of people don't pay attention to that. But even in the U.S. economy, that's the most important leading economic indicator. You can't get anyone better than that. So as long as the PMI is performing very well, so we should be optimistic about the aggregate demand, especially in the economy. Now, the growth happened even when, we sort of limited trade, because the border controls that the federal government put in place seem to have limited trade. Now, somebody asked me about
We'll come to some of those indicators in a moment, but tell us, because he also reminded us of the government's projections. The ERGP projected a 4.5% GDP growth in 2019. And so if we're doing this at this point in time, he thinks, well, it mixed feelings for him.
Well, 4.5, but we're 2.2 or 2.4, so we're still far from the target. But compared to the previous period, we seem to be performing better. And also, let us put into consideration that the oil price.
Oh dear! Why did you mention the oil price, Mr. Bunga? Okay, the oil prices don't like being mentioned anyhow.
I really hope we'll get him back, because over and over again we have government after government since 1999 have talked about the need to diversify the economy.
Yep.
And even this report that we're looking at, over 90% of whatever it is that we're recording now is accredited, is credited into the account of this same one economy, one product of ours. And so it is really something that should give anyone concern. That is where we are now, with all of this oil bunkering, all of this, what's the English word again? All this theft, all this pipeline vandalism, all this burning and all of that. It is still the only thing that we are relying on, and that should really be scary.
The interesting part is when people ask, what did we do right? They tell you, well, oil contributed 8.7% to the real GDP, but non-oil sector contributed 91.22%. And you have,
that
ICT.
Yeah.
And you see ICT right there. You see the manufacturing sector and what have you. So, well, yeah, it's mixed feelings, yes. But he mentioned the Purchasing Managers Index, but some will also say, check the CPI, the Consumer Price Index, which measures inflation. You see that it is as 12.31. So you see, it's a very interesting conversation. And when he mentioned oil prices, you see that it seemed like the network went off.
Yeah, and you guys also mentioned the services sector.
The services sector,
huge.
Yeah, the services sector contributed to 54.60% to the real GDP in the year under review, and agriculture contributed 21.91%, industry 23-point-something%. Now, this services index includes the telecoms, which you talked about the other time, which essentially saying services that are helping the economy to grow in the way it ought to grow. Well, that is a good thing, most certainly. Hitherto, these services were not captured in the real, in many of the figures from.
I think a lot of that in the agri sector too, beyond the white-collar jobs too.
Yeah.
We need to see how they can capture some of those things so it could properly reflect. Because don't forget, the last time the Minister of Labour, Dr. Ngige, was on the show, he talked about, what, is it 8 or 11 million direct or indirect jobs?
Direct or indirect jobs.
I did call CBN afterward. They said, well, yes, but it's not been formalized. So all of those issues have got to be sorted. But let's get back to Mr. Bongo Ade. Hoping, are you going to continue from the oil prices this time, or are we going to be second time lucky? Go ahead, please.
Okay, so I was saying that, we have to, look at the sectors or the things that drove the growth. There is this, debate about the CBN policy. So let me just dwell on that a little bit more because there's been a lot of heated debate over the unconventional monetary policy that the CBN had embarked on. I think they've been put, they've been forced to defend that policy on many occasions. And they say that the Nigerian economy is very peculiar in many ways. So that the orthodox monetary policy that may work in other places may not be expected to be optimal for our reality here. So that is the reason why they have embarked on the unconventional monetary policy that they've been implementing, for quite a while now. Now, if you begin to look at it, and then, of course, the indicators are somehow conflicting in many ways. But then let's look at credit to the private sector, which seems to have started to grow. We know that immediately after the recession in 2017, even the best part of 2018, we had negative credit to the private sector. But then CBN started all manner of interventions and then some sort of dictatorial monetary policies, giving banks mandate, increasing the loan to deposit ratio and all of that. And then after that, we also saw that the prime lending rate, dropped significantly. So credit to the private sector started to increase. So those are some of the indicators that we look at, and then maybe we begin to see that they have helped the economy to really turn a new corner. But
how do you reconcile that, Mr. Adi? Just a moment. So how do you reconcile you referring to them as dictatorial policies if they are achieving results?
Well, dictatorial in the sense that if you look at it, they're not market determined, right? So those are, pronouncements that CBN, they give banks certain mandates. They produce circulars, tell the banks what to do. And then, they also unleash some penalties against banks that are not compliant. So if you look at it, that's what I call dictatorial monetary policy. But it's all part of the unconventional suite or package of monetary policies they've been using. But now that the economy has turned a new corner, so it means that somehow it's working. I'm doing a work now that I'm looking at it, and I say that is there a kind of a method to the madness? Yeah, but because when you also consider other economies, because that's what I'm doing, to see which other countries have experimented with this sort of unconventional monetary policies and did it work. And then curiously, the United States did something like that, the recession of 2007 and 2008, when Obama came into power, at the beginning of Obama's tenure. So he had to embark on all those unconventional monetary policies, bailing out the banks, bailing out so many United States big companies, to protect jobs and also create growth in the economy. And over the long term, now the U.S. is enjoying the best time in its economic history because unemployment is an all-time record time low. And then we also look at China. They've been using these unconventional monetary policies by pumping money into the system. Now we know that we have liquidity issues here. Now it creates some problems, but on balance, it seems that it's beginning to work. And then because my concern is that the prime lending rate has dropped significantly. Now during the recession also, we noticed that the CBN somehow borrowed so much by unilaterally increasing the coupon on bonds and then the treasury bills, such that it created an incentive for people somehow to disinvest from the risk sector, in preference for those paper instruments. So a lot of people were even liquidating their real assets and investing in all those instruments. But now that the coupon on those bonds seems to have crashed, again, that is thanks to CBN. So they have again changed incentives so that maybe the capital market will begin to boom. People now begin to invest in the risk sector. So all said and done.
Mm-hmm. All right, Mr. Adi, we'll come back to this. I mean, when you talked about the CBN policies, I thought there was that recent one, the domiciliary account that CBN had to eventually respond to, asking the banks to stop misleading their clientele. But we'll come back and raise a couple of more issues with you in a moment. Stay with us. All right, welcome back. Let's get to Bongo Adi, our concluding moments with him. So tell us, how can we ever achieve some of these lofty, interesting targets without addressing power supply?
Well, one thing at a time, because they are all complementary, but then we have to start somewhere. So it is good that somehow the CBN seems to have figured out a way to deal with the economy. Well, the time shall still tell. I think it's still too early to begin to say with Eldorado or whatever. But I think we seem to be on the right track. Well, the end justifies the means. That's what it's all about. I understand there are some pressures on the exchange rate as well. There are some pressures also on our external reserve, and a whole lot of it, because again, when the CBN was borrowing money, through the paper instruments they were unleashing in 2016-17, now some of those are falling due, so maturing, and then they have to clear that. So in looking for the money means that the exchange rate will have to drop, but I don't know when that will happen. but essentially we still continue to witness some pressures on the Standard Reserve. Now, that aside, the unconventional monetary policies seem to be working. My interest is that the lending rate has dropped. And then the real sector, real estate especially, has bounced out of the recession. Now, we need to also put this into consideration that the real sector is the first to go into recession when an economy is going into recession. And then it is the last to come out. Now, we have the real sector out from the recession and it's beginning to grow gradually. So that is an indication of good days to come. Then I think also that the economy has adjusted to a new normal. Despite the infrastructural challenges, despite the policy rigidities in some areas, there seems to have been a readjustment. So the economy is, bouncing off the recession gradually and then, beginning to stabilize. Now, the complementary policy will be that the government will have to use the fiscal measures and then invest deliberately on infrastructure to build the power, build the transportation infrastructure. Those are the two key enablers to productivity growth. So right now, we are nowhere in power generation. There are still so many constraints there. So I think that is what the government has to pay close attention to. If they can sort out the power issue and also transportation, I think a lot of progress is being made. But again, having said all of this, without security, we cannot achieve any growth. So I'm sure that the growth that we would have achieved would have been greater than what we have if there is security in so many regions, sections of this country. So many parts of the country continue to be.
All right. Thadi, let me ask you this. You've mentioned a number of things that I think are quite important for government to pay attention to, and you went to just the place I was going to take you on next, which is ease of doing business. On the one hand is the security issues that you've mentioned. On the other hand are the figures, and then the reality, the experience of the people. So let's just juxtapose just two of those. So there are the figures saying things are looking up, and then there is the reality. Both don't seem to marry if you ask the man on the street.
Yeah, let us not forget that Nigeria is an economy with very huge potential, okay? We are still nowhere close to our potential GDP at the moment, so we need to realize that. So every little effort we make, so that's the catch-up effect. Every little effort, every little investment tends to go a lot more, given where we are coming from, and then the capacity and the potential that we're inherent in the economy. So that's what we need to realize. But then the rigidities still remain. That has nothing to do with the growth we are registering. It's just because we've made effort, some little investment because of where we are coming from. So it tends to go, relatively high. Now, we can continue the progress that we're making is not sustainable in the long term if we are not able to address the infrastructural rigidities and the security situation in the country. Now, talking about ease of doing business, I think the first one is security. Okay, so many swaths of the country's territories are completely dead when it comes to economic activity as it is right now. People cannot traverse certain areas. People cannot move to many parts of the country. And then even within the other places where economic activity seems to be happening, we still have so many constraints, so much constraints on the ways. So you have roadblocks everywhere. You have so many impediments to business. I think government has to look into this. Now, the excuse.
So on a final note, so we started a new year and projections have begun to come in from the IMF and other organizations, some at 2%. If you would project, perhaps, what would you think we'll do this year? And also, how close are we? Because there's been this talk about devaluation. How close do you think we are to a devaluation, if that's even on the horizon anyway?
Devaluation is on the horizon. I think I mentioned that. Given where we are coming from, the bonds, the money the central bank or the nation borrowed, they were based on forward contracts, which are maturing. I think as forward contracts, I think the term were like 390 or so naira to the dollar. So we will expect as those contracts come due, and then the CBN is obliged to fulfill them. So we will expect the naira to, find its natural level, maybe. It's a matter of time when it comes to devaluation.
All right, then. I remember you did talk about the interest rates. I know that the former CBN governor, the Emir now, he did talk about a target of inflation, a single digit, I think 9%. Now they talked about interest rates for the agri sector, single digit. They talked about interest rates for, I mean, generally as well, single digit, but it's still at double digit. So who knows when that will be. But I guess you said maybe we'll stick to what you say about the economy being that of huge potential. We'll hope to maximize that potential sooner rather than later. Thank you for your time this morning, Bongo Adi, an economist.
Thank you very much. Thank you.